What's going on, everybody? Billy here from Storm Trades. Time for another trade recap. This time, we're going to go through my oil futures long trade from Friday, June 13th. This was a weird one. We took a loss on this trade, and after I go through the loss in this video, I will go over why I think I made a couple crucial mistakes in my analysis. Anyway, let's get right after it. So this is the daily chart we're looking at right here. Always start on the daily. I'm looking for obvious price action. I'm looking for internal range liquidity, external range liquidity. Where are we currently in relation to those? And what is the clear picture that is being painted? First thing that I do is with the daily is I mark up the previous daily low, previous daily high, and I'd like to run a fib just to see where we're currently trading at, right? And one thing that I just want to make note of is this was the morning, or the overnight was when the new war in the Middle East popped off, right? And so these are oil futures, so it's very easy to get a very long bias, a bullish bias on oil prices when a new war in the Middle East is popping off. And so I'm going to get into this a little bit later, but let's just say that I was letting the external influence, the fundamental analysis of, hey, oil prices should shoot up and they should continue to shoot up because there's a new war, and not necessarily just reading the charts for what they were. Okay, now I digress. I have my previous daily high and low marked out, the midpoint here. I do want to make note that we were kind of expanding through an older volume imbalance on the daily, which I marked out right here, right? And to me, this price was just absolutely flying, but we were flying through a swing high, right? So that's external range liquidity. Normally, I look to short from external range liquidity, especially if it's a swing high. And I don't typically take the morning price with much of a thought, because this could just turn into a wick. So, but I was completely bamboozled by the news, and I thought we were just going to continue to rocket higher. So I sort of disregarded this swing high, and I saw this expansion, and well, that sort of clouded my judgment for the morning, just to be honest. Anyway, I thought we were going higher, and mainly this was just because I thought that the war would bring higher prices. All right, now moving on to the hourly time frame. My thesis on price moving higher was only reestablished, or reinforced rather, by the price action, the narrative I was seeing on the hourly time frame. So on the hourly, I'm looking for the most recent change in the state of delivery, and from there, I just try and see if order flow is being respected on one side of the curve versus the other. So, for instance, right here is the most recent change in the state of delivery, and whenever I get a clear change in the state of delivery, I will draw a fib and just sort of see where we are. This is another red flag here. Okay. We've already completely expanded through the -4 or -4.5, and I knew that, but I was considering it was as a outlier day, and we most likely were just going to go higher because, again, it was a new war that popped off. So, all right, now I also want to take a look at where current prices most recently been delivering from, and are we respecting PD arrays on one side of the curve? We had a bullish hourly fair value gap here that we respected the midpoint and traded away with some displacement, and that displacement here is notated. Oh, and we had a nice little right here. I just want to make a note that we had a swing low that was traded into that hourly fair value gap, and we had another hourly fair value gap right there. Okay, it's kind of small, but we currently have just traded into it at the time of this candle close, which was at 9 o'clock. Okay, so this is when I start to trade. And I also want to make note that I had a swing high above. That was a good draw on liquidity for me, right? So I really considered this an A+ setup. Outside of the fact that we are above a swing high and we've already moved more than -4 to -4.5 on the standard deviation. But regardless, I liked how we had engaged POI here after sweeping an hourly swing low. I moved to the M5 time frame where I look to frame my trade executions from, and I'm looking for a sweep. Okay, and then I'm going to mark out a change in the state of delivery, and I'm looking for displacement through that. Okay, so there's we had our sweep. Okay, our sweep is actually up here. There's our sweep, right down into the hourly POI. And whenever I have a sweep, I'm going to mark out the series of, in this case, the series of down close candles that took that liquidity. And that is this series of down close candles right here. I marked it out as a change in the state of delivery. And I'll be looking for, and I was looking for, a close above that with some displacement. And we move price here forward a little bit. And at this point, we did get a move that closed above the change in state of delivery. I had the news on my side, right? I thought I did. I had a nice draw on liquidity. In fact, we had some low resistance liquidity here. So I like this. Just like that. I really like this trade actually. And I entered a long right here targeting 2R, but I probably would have taken off the trade at that high time frame drawn liquidity. I'm not 2R or bust. I am relevant levels that make sense, right? So anyway, so I had that marked out, and I entered a trade here on that close of that on that bullish candle close. Stop at the all the way down here at the swing low, and take profit up here at 2R. Okay, and watch what happens here as we just fail instantaneously. Boom. All right, what happened? Well, for starters, I let the outside news influence dictate an extreme bias that was unwilling to look at price going in the opposite direction. I was unwilling to even consider that price could go down on a day where the news said that a new war had popped off in the Middle East. So I made note. I trade every day and set up my analysis inside of Unicorn University, and I had made a note after I lost this trade, which is I really let the outside influence dictate my bias more than I did looking at the charts. And it's just that's okay. We learned from that, right? So on paper, it makes perfect sense that price would want to go up, and ultimately, price probably will go up, but it doesn't have to go up on my time on my time schedule, right? So anyway, if you got anything out of this at all, I really appreciate it. They like and subscribe. It means a lot. I'm going to keep doing these. It really helps me to understand what I'm doing right, what I'm doing wrong, what I can improve on. And you guys have a great day. I appreciate anybody who watches these videos big time. All right. Bye-bye.